Welcome to The Explorist, where we dive deep into the latest trends and secrets that shape our world. Today, we're unraveling the mystery behind wealth, real, tangible wealth. We're talking about the assets that are making people rich, and how you too can get your hands on them. Buckle up, because by the end of this video, you'll have a blueprint for wealth creation that could change your life forever. Let's dive right in. Let's start with the most obvious and liquid form of wealth, cash. Cash is king, right? But how does cash truly fit into the equation of getting rich? Cash is the bedrock of any financial empire. It's what you use to invest, to purchase assets, and to leverage opportunities. But it's not just about having cash, it's about understanding how to use it wisely. Did you know that cash can actually be a liability if it just sits idle? Inflation erodes its value over time, which means if you're not investing it, you're losing money. Let's explore how wealthy individuals and corporations use cash. They don't just hoard it, they invest in high-return assets, save it in high-yield accounts, and utilize it in ways that multiply its value. Think of cash as a tool rather than a destination. The key is to keep it flowing, to make your money work for you instead of the other way around. Now let's talk about real estate, one of the oldest and most reliable ways to build wealth. From residential properties to commercial real estate, owning land or property can create a steady stream of income through rent or appreciation in value. Real estate is a tangible asset that historically appreciates over time. Unlike stocks, real estate is something you can touch, see, and utilize. What makes it so lucrative? Leverage. With a small down payment, you can control an asset worth far more than what you paid using borrowed money. This magnifies your returns when property values rise. The rich also understand the tax advantages that come with real estate depreciation, mortgage interest deductions, and more. And let's not forget about real estate flipping, where savvy investors buy undervalued properties, renovate, and sell them at a profit. The possibilities are endless. Bonds are often overlooked, but they are an essential part of a balanced investment portfolio. They are seen as the safer, more stable cousin to stocks. Governments, municipalities, and corporations issue bonds to raise capital, and in return, they pay you interest. Bonds are less risky than stocks, making them an attractive option for risk-averse investors. But just because they're safer doesn't mean they're not profitable. The wealthy use bonds to preserve capital while earning a steady return. During economic downturns, bonds often outperform stocks, acting as a financial cushion. Let's also talk about the types of bonds: government bonds, municipal bonds, corporate bonds, and how each one plays a unique role in wealth-building strategies. When we think of creating wealth, stocks often come to mind first. Why? Because stocks represent ownership in a company and the potential for significant capital appreciation. The stock market has created more millionaires than any other asset class. But it's not just about picking the right stocks, it's about strategy. From value investing to growth investing, there are numerous approaches to stock market wealth. We'll discuss the importance of diversification, understanding market cycles, and the power of compound interest. Investing in stocks isn't just about timing the market, but time in the market. Over the long term, stocks have historically provided the highest returns compared to other asset classes. Mutual funds and index funds are perfect for those who want to invest in stocks but prefer a more hands-off approach. These funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. Why do the rich invest in mutual and index funds? It's simple diversification and professional management. Instead of trying to pick individual stocks, which can be risky and time-consuming, they invest in a broad range of assets. This spreads out the risk and increases the chances of earning a steady return. Index funds, in particular, are a favorite among the wealthy because of their low fees and the ability to track the overall market's performance. Over time, index funds tend to outperform actively managed funds, making them a smart, long-term investment choice. Next up is equipment, an asset that's often overlooked but incredibly valuable. Whether it's machinery in a factory, medical equipment in a hospital, or even computers in an office, equipment is essential to running any business. The wealthy understand that the right equipment can drastically increase productivity and, consequently, profits. They invest in state-of-the-art machinery that enables them to produce goods or services more efficiently, giving them a competitive edge. But equipment isn't just a business expense, it's an asset that can be leveraged, depreciated, and even resold. The key is to invest in equipment that not only meets current needs but also anticipates future growth and technological advancements. Patents are a powerful asset, particularly for those in technology, pharmaceuticals, and manufacturing. A patent gives you the exclusive right to make, use, or sell an invention for a certain period. This legal protection allows you to capitalize on your innovation without fear of immediate competition. The wealthy understand the value of intellectual property. Patents can generate substantial income through licensing agreements, or they can enhance the value of a company, making it more attractive to investors. In some cases, a single patent can be worth millions. We'll also dive into the process of obtaining a patent, the costs involved, and how to strategically manage and monetize a portfolio of patents. Trademarks are another form of intellectual property, but instead of protecting an invention, they protect a brand. A trademark is a recognizable sign, design, or expression that distinguishes products or services from those of others. Building a strong brand is crucial for any business, and trademarks are the legal foundation of that brand. The wealthy understand that a trademark can be incredibly valuable, particularly if the brand becomes well known. Think of brands like Apple, Nike, or Coca-Cola. Their trademarks are worth billions. In this section, we'll explore how to register a trademark, the benefits of trademark protection, and how to enforce your trademark rights against infringers. Content creation is a rapidly growing asset class in today's digital age. Whether it's writing a book, composing a song, creating a digital course, or producing online content, these intellectual properties can generate significant income. The key to success in this area is creating something of value that people are willing to pay for, whether it's knowledge, entertainment, or inspiration. The wealthy understand the importance of intellectual property rights and often create multiple streams of income from their content. For example, a best-selling book can generate royalties for years, while a popular online course can provide passive income. In the digital age, content truly is king. One of the most overlooked assets is human capital. Your team, your network, and your relationships can be some of the most valuable assets you have. The wealthy understand that investing in people, whether through education, training, or simply building strong relationships, pays off in the long run. A skilled, motivated team can drive a business to new heights, while a strong network can open doors to opportunities that would otherwise be out of reach. We'll discuss how to build and nurture human capital, the importance of mentorship and leadership, and how the right people can multiply your wealth. Unique rights refer to exclusive opportunities that give you an edge over the competition. This could be anything from exclusive distribution rights to unique partnerships or contracts. The wealthy often have access to opportunities that others don't, simply because they're in the right place at the right time, or they have the right connections. These unique rights can be incredibly lucrative, allowing you to capitalize on opportunities that others can't. We'll explore how to identify and secure unique rights, the importance of negotiation, and how to leverage these rights to create wealth. Being the first to market with a new product or service can provide a significant competitive advantage. This is known as the first mover advantage. Companies that can innovate and bring something new to the market often capture the lion's share of the profits. Proprietary business models are another powerful asset. These are unique ways of doing business that competitors can't easily replicate. Whether it's a subscription service, a unique supply chain, or a patented technology, proprietary business models can create a moat around your business, protecting it from competition. We'll discuss how to identify first-mover opportunities, the risks involved, and how to create a proprietary business model that stands the test of time. Royalties are a form of passive income that can generate wealth long after the initial work is done. Whether it's from a book, a song, a patent, or even mineral rights, royalties provide a steady stream of income without requiring ongoing work. The wealthy understand the power of royalties and often invest in assets that generate them. For example, purchasing the rights to a song or a book can provide a continuous income stream as long as the work remains popular. We'll explore the different types of royalties, how to negotiate royalty agreements, and the potential risks and rewards involved. Finally, let's talk about raw materials and commodities, things like oil, gold, timber, and agricultural products. These are the building blocks of wealth and have been for centuries. The wealthy often invest in commodities as a hedge against inflation and economic instability. These assets tend to hold their value or even appreciate during times of crisis, making them a valuable part of any investment portfolio. We'll discuss the different types of commodities, how to invest in them, and the risks involved. We'll also explore the global factors that affect commodity prices and how to capitalize on them. Last but not the least, we have brand and goodwill, intangible assets that can be incredibly valuable. A strong brand can command higher prices, attract loyal customers, and generate significant profits. Goodwill, on the other hand, refers to the value of a company's reputation, customer base, and relationships. It's what makes a company worth more than just the sum of its parts. The wealthy understand the importance of building a strong brand and maintaining goodwill. These intangible assets can be the difference between a successful business and a struggling one. We'll discuss how to build and protect your brand, the importance of reputation management, and how to capitalize on goodwill in business transactions. So there you have it, minus 14 assets that are making people rich. And now you know how you can tap into them too. Whether you're just starting out or looking to grow your wealth, these assets provide a roadmap to financial success. If you found this video helpful, don't forget to hit that like button, subscribe to my channel, and share this video with your friends. And remember, wealth isn't just about money, it's about building a legacy that lasts. Start today, and who knows, you could be the next success story we feature on our channel.